The FICO credit score condenses your history as a borrower into a nice and tidy 3-digit number. That number ranges from 300 to 850, and it's calculated separately by each of the 3 credit reporting agencies: Equifax, Experian, and TransUnion. FICO doesn't reveal exactly how it formulates a credit score, but the company does provide a more broad-based look at how everything comes together. So let's take a look at the 5 big factors that make up your FICO score. The first is payment history. This represents 35% of your score, making it the single biggest factor. Payment history considers your history of on-time payments, late payments, and derogatory items like collections and bankruptcies. Second is your amounts owed. This represents 30% of your score. Having some debt isn't necessarily a bad thing, but having too much in relation to your available credit can definitely drag down your score. Try to keep your amounts owed to about 30% or less of your total available credit. Third is your length of credit history. This represents 15% of your score. In general, a longer track record for your credit will usually bump up your score. The fourth factor, your types of credit. This accounts for 10% of your score. The FICO score looks through the different types of credit you use. For example, car loans, credit cards, retail charge accounts, to installment loans and mortgages. The fifth and final factor is new credit, which accounts for 10% of your score. FICO looks at how many new accounts you have and the types of accounts. Applying for new credit may not hurt your score, and if it does, it's typically a very small impact. FICO also allows for rate shopping, meaning your credit score won't plummet if you're talking with multiple mortgage lenders. Remember, not all creditors report to the credit bureaus. Those who do may not report to all 3. That means you might have 3 different FICO scores, one from Equifax, one from Experian, and one from TransUnion. Mortgage lenders will request your credit scores from all 3. If the scores are different, and they very often are, lenders will typically use the median or middle score. It's also important to understand that lenders often see different scores than what consumers see. When mortgage lenders pull your credit, the credit bureaus use a scoring formula specifically designed for home loans. So the FICO scores you see as a general consumer may be different, sometimes very different, than what a mortgage lender sees. It's so important to stay on top of your credit as you prepare for the home buying journey. You won't truly know if your credit is mortgage ready until you talk with a lender.